Fair enough. So it was the spending review thing that they were touting this week, and it was essentially them looking through current and proposed and just happened sort of spending and seeing what could be tweaked moving forwards. It's also when the departments get their updated budgets. So it was worth listening to, I guess, but I must admit it was about 45 minutes long, the speech. There wasn't a lot of information in it. So after it had finished, I had to go and get all the numbers and things like that out of the little booklet accompanying, well, there's 5 accompanying booklets that's come with it, Steve. I thought, right, today I'll listen to Peston's review of it as well, just so I can make sure I haven't missed anything. And he's whinging about the same things I was whinging about. It's like in 45 minutes, you've got to at least give me the numbers. But they didn't. So I'm going to call it what I called it last time. I've listened to it, so you didn't have to. And here was the kind of hot sort of bits that I saw. On public services and the economy, there's about 190 billion that's allocated now extra for the daily running of public services. Total departmental budgets are going to grow by about 2.3% per year in real terms. They were keen to stress that they're aiming to achieve economic stability, keeping this commitment to those fiscal rules. The very important one that they mentioned quite a bit was including this not borrowing to fund day-to-day spending and also to reduce national debt as a percentage of the economy. In terms of the departments, there's an extra 29 billion per year for the NHS, significant investment to bring the health system into the digital age and to improve technology, which actually is, I would say, quite welcome, Steve. I think we need to do something to reduce the share of the that the NHS takes of taxation revenues, and hopefully by introducing technology and actually making the machines functional might help out with some of that. In terms of defence, we know about this one, Steve. This was pre-announced, but spending is increasing to 2.6% of GDP by 2027, about 600 million uplift for security and intelligence agencies. For housing, there's about 39 billion investment over the next decade for affordable housing, aiming to build 1.5 million new homes by mid-2029. And obviously, Vistry had some good days anticipating this on the run-up. Education, 4.5 billion annual uplift for schools, including about 2.3 billion to fix the crumbling classrooms, the racking issue. About 2.4 billion for rebuilding 500 other schools. Free school meals is going to be extended to about 500,000 more children than it was before as well. About 30 billion for nuclear power projects. There was 14.2 billion, so half of it essentially is going to Sizewell C, which again was pre-announced. And then there was support for nuclear fusion, for small modular reactors, go Rolls-Royce, and carbon capture and storage projects as well. In terms of transport, major investments in public transport projects outside of London, hooray! Including 3.5 billion for the Trans-Pennine route, the £3 cap on bus fares. Steve, £3 on bus fares. I thought they were still 50p. I haven't been on a bus in years, to be honest with you, but £3 doesn't sound like a great cap. But yes, London's transport network is also going to receive about 2.2 billion for capital renewals as well. On science and tech, research and development funding to rise to 22 billion per year. I thought they were adding 22 billion to it, Steve, and I thought, well, go on, this is amazing. We're finally actually, doing something worthwhile with the money, but no, it's not. It's actually rising less than inflation. This, and it's actually in real terms is going to fall year on year. So that's more like it. But yes, 2 billion for the government's AI action plan, and it is worth noting that Singapore is spending about 4 times this every quarter. So yeah, it's not really that good. In terms of efficiency and savings, I said there's a zero-based review of spending found savings, essentially through selling government buildings they're not using, land they're not using, cutting some office costs, and reducing spending on consultants. And they also said that the asylum hotels will be ended by 2029, the use of them, which will save about £1 billion per year as well. So in terms of regional allocations, Scotland gets 52 billion, Wales 23 billion, and Northern Ireland 20 billion by the end of the spending review period. And the other notable points are increased support for pensioners in winter. So this is essentially the winter fuel payment is coming back, but it's going to be means tested. And if you don't fall under the requirements for it, it's actually going to be claimed back through the taxation system, which is a good solution, I thought, Steve, and probably what they should have done the first time. A focus on using newer technology to digitize services, creating a cost-conscious culture within departments, and they want a leaner, higher skilled civil service, essentially, which I think people would be happy with that. I think nothing really to argue with there. And yes, so departments like Health and Defence are seeing increases, but Home Office, Foreign Office, and the Department for Transport have all actually got budget cuts. So just to bear that in mind. But that was really the gist of it, Steve. I didn't really get a lot else out of it. I must admit to skim reading the documents because it's about 500 million pages. But yeah, I thought this was, well, I don't know what this was, Steve, but it was like a small mini budget of sorts, I guess.
Yeah, 45 minutes or so is, I mean, you could have watched an entire Australian innings in that time, but instead you were listening to this, and glad that you did, because there's lots there to get on with kind of talking about here. And I thought generally reasonably positive. I mean, depends how you think about this politically. You can view this either as kind of fine-tuning the previous stuff, or as U-turning on some things that were previously. I think it probably depends which bit you look at, to be honest. The winter fuel allowance stuff is probably something of a U-turn. Some of the other stuff looks more like kind of small adjustments to what we were seeing in the previous proper budget, I guess. I'm quite positive on a fair bit of this. The attempt to try and digitize things and move towards kind of, not AI, because we haven't got enough money to do an AI thing realistically, but the NHS is one of Palantir's bigger customers, as I understand it. I mean, bigger certainly on the kind of governmenty side of things, and Palantir does genuinely good stuff, as I'm given to believe from people who have used it kind of firsthand, and they all seem pretty keen to sign up. So that's kind of encouraging. I think that's about as good as you can get for the time being, and I wouldn't mind seeing kind of further investment there, even if it does mean that more of our money goes off to the States here. There's a big shift on the foreign aid and defence thing, isn't there? It felt like I was seeing this being presented by, I think maybe The Guardian actually, as a kind of nod towards reform a little bit. So defence budget goes up, foreign aid budget goes down, effectively, and the ending of the asylum hotel thing will maybe claw that back for the foreign aid division, or at least some of it back for foreign aid. But there is an increase in defence spending, which is a sort of an odd one a little bit, in the sense of not many people seem to argue about this, partly because to some extent it's NATO a condition of this, but plenty of other countries haven't been meeting their NATO commitments for defence spending, and the UK is set to spend more than its kind of NATO mandated requirement thing. That's actually one of the few things that Trump has done pretty well, I think, which is get countries to start paying the things that they're meant to be actually paying for the NATO stuff. But it's an interesting kind of move, and I think, well, it will suit a lot of investors who have recently been interested in defence stocks that, what on the face of it is a cyclical high for them, but maybe there's more in this if this kind of spending keeps going over the long term. I also like the small modular reactor stuff in terms of nuclear power. I think that's an option that's well worth exploring here. I don't have a strong view about Rolls-Royce as the right choice for this. It seemed like the kind of obvious choice, being a British of a sort company, and being kind of the provider of a decent number of jobs in the process, I think. So yeah, as you say, go Rolls-Royce. Pleased for them. There's a bit there that kind of feels like a sort of light version, and I mean this in a good way for once, of us sort of half-arsing something the Americans are doing of kind of government efficiency here, looking for a leaner, more skilled civil service was the way you put it. The difference is that we sort it out like this rather than have a maniac waving a chainsaw around, which isn't particularly edifying for anybody in the way they go about doing politics over in the States at the moment. But overall, reasonably encouraging, I think. The word getting used quite a lot was renewal, as I saw it in the headlines today. And yet, the company called Renew, which I really should have written up for this show, that stock went nowhere on the news. Renew is kind of maintenance for rails and roads and water and cables and I think maybe transmission lines to some extent. and that sort of, or phone lines to some extent, and that kind of thing, public infrastructure. Basically, that's all been kind of running behind, and that company's been not struggling, but hasn't been performing terribly well lately. So that's interesting to know. I quite like some of the infrastructure spending that's going on, though, as you say, Vistry and the house builders in general, but to a large extent, Vistry had been getting pushed along nicely, partly in anticipation of this, partly in response to this, which is why it's been a very good week for a number of builders. I think I was struggling to see what it was that was moving them earlier on, but it's almost certainly this, or the anticipation thereof. It was presented, I guess, the criticism of it that I read from Mel Stride over on the opposition side, and it's the job of the opposition to oppose, so I don't mind too much of it. Suspend first, tax later, kind of budget spending plan or whatever. I don't massively mind that. I think that criticism may be true, but I don't really mind it too much, in the sense of, I think if you think there's going to be inflation around, you probably do want to spend it and then try and pay it back later. That might not be the end of the world. So, yeah, I was largely sort of feeling reasonably positive on this. Whether you can think of better priorities, I don't know. But nothing in this stood out to me as particularly egregious, Steve.
No, I agree with you there, Steve, and I think that's generally the newspapers have got back to the beginning of the more taxes coming cycle, and how Rachel Reeves will try and make that happen moving forwards. The other thing I'm just sort of keen to point out, Steve, before we quickly move on, is that we as part of the budget, we changed to Persnuffle, which is obviously a very catchy name, but it's changed the way that we measure debt as a country. So we used to just obviously just count the beans as how many beans there was, but now we move to essentially what's called public sector net financial liabilities, so Persnuffle, and that essentially means that if you use debt to buy a financial asset, essentially that doesn't count as debt. And the idea behind it was that basically frees up Reeves to do a little bit of spending here and there and create herself some more headroom. She's not using the Persnuffle budget at all. There's less than half. I think there's less than 5 billion going on it over the next couple of years, which is kind of nothing in terms of what our total borrowing and our total tax take per year either. So for that not to be starting to sort of fill up with things is kind of worrying. And because of that, that's meant that her headroom is really small. So when people say taxation is coming, because Labour have said that they're going to stick to these fiscal rules, it's essentially because she's got about 10 billion of headroom left, which sounds like a massive number, Steve, but we take like $1 trillion in tax almost. So 10 billion is like 1%. And she's already eroded about 2.5 billion of that. Just over these last couple of sort of mini budgets and spring budgets and whatever this thing was. So we're kind of down to like 0.75% headroom, which, as you'll know from just like looking at your portfolio every day, that can do stuff to that, and there's not really anything you can do about it. So yeah, it seems strange at the moment. I feel like Labour has more tools here that it could be using. Reeves has more tools here that she could be using, and she's basically changed to this system and doesn't appear to be using it. But the same as you, Steve, I think largely this is positive. And as we say in everything when we cover something like this, it'd be nice if it works, Steve, because it will obviously make lives better for maybe for us, but for certainly for a good number of folk. So yeah, I think with all governments, we kind of hope that we don't have to agree with them, but we kind of have to hope that they succeed because it makes life better. And they're here, whether it succeeds or not. I'm afraid you've still kind of got 3 years of it.
You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.